Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, David Moadel. David is the head of research for bonds and gold at Portfolio Wealth Global. That's portfoliowealthglobal.com. You can see his work on YouTube, Twitter, and I am very happy to have David back on the X22 Report Spotlight. David, welcome back to the Spotlight.
I'm very happy to be back. Thank you, sir.
Hey, thanks for coming back, and I really appreciate it. And let me just say, the economy is crazy out there with the stock market, what's going on, especially with China. Now, What's very interesting with China, Trump tweeted out the following: China posts slowest economic numbers since 1990 due to U.S. trade tensions and new policies. Makes so much sense for China to finally do a real deal and stop playing around Trump. Now, why is China slowing down? And why are they reporting these economic numbers? Let's start off with that, and then we'll get to the second part of what Trump is talking about, a real deal. So why do you think China is slowing right now?
Yeah, China is slowing because it has it's been so dominant for so long that it really has nowhere to go but down. You can only be on top, kind of like the dollar can only be king dollar for so long, and it's on its way down. China has nowhere to go but down because there's so much competition going on in the world. Everybody wants to be number one. You can only be on top for so long. Look, China is an economy that has to grow at 6 or 6.5% per year. That's not sustainable forever. If it has, the numbers just came out. It's had its weakest economic growth in 28 years. It's risking civil unrest, mass unemployment, and just general problems you have to go through when you have 1.4 billion people to govern, and you need to find employment for all of them in this very centralized economy. So what they're doing is they're going to keep stimulating because they have to. They must. And obviously, they're under a lot of pressure to end this trade problem with the U.S. Here's what I expect. I expect a solution and a resolution for this problem sooner rather than later. This will benefit both the U.S. and China. This is Trump's third year in office. He wants results, okay, so he can get reelected, of course, and because China really needs this as well. All right. So, yes, there's a slowdown right now, but I believe there will be a resolution. And if people want to learn more, we have a report, portfoliowealthglobal.com/Fed. It's a report on, the Fed versus Trump and what's going on there. Trump is obviously trying to divert attention from this China problem and create some kind of enemy that people can hate. And that's the Federal Reserve, which I'm not a huge fan of myself. So I can see why he would hate it. The Federal Reserve is tightening when it shouldn't be tightening. It's raising rates at an alarming rate. The only reason they're trying to do this is because they're trying to orchestrate a market correction so that rich people can buy at lower prices before this U.S.-China trade deal happens, and it will happen. All right. Another point I want to emphasize is that China is de-dollarizing also. This is big. When they stimulate, they're going to create more of their own currency, which is what they need to do if they want to change the reserve currency role of the dollar, which will happen in about 4 to 5 years out. When their GDP eclipses that, it will happen. It'll eclipse that of the U.S. So, yes, China is slowing down, but it will become the number one economy in terms of GDP in the world. This will happen. Also, I predict that in 10 years from now, China and India will be bigger than the U.S. So, look, the world is changing. We have to ignore the noise about China slowing down right now. We have to look at the bigger picture. The middle class is dying, and this is one more nail in the coffin. For China to be so bold as to stimulate in this way, they're basically telling the rest of the world, we're not in the dollar game anymore. We're going to do our own game. We're going to increase our own currency supply, just like the U.S. did from the 1970s onwards. They're going to the U.S. created this nanny state, a debtor nation where people are forced to use these deteriorating dollars. So China is creating a currency war. That's what they're doing. That's what they're going to continue to do. They're doing it with their ally Russia, which is buying a lot of gold. I'm sure people know that. China buying a lot of gold, Russia buying a lot of gold. So it's important for people to stay educated on this. We're going to cover it in the newsletter throughout 2019. We also have a report, portfoliowealthglobal.com/gold playbook, because in this report, we're going to highlight everything people need to do to get behind and understand regard to this. Gold is going to be big. We can talk about it if you want to. If you're worried, you need a safe haven, start reallocating now. Do it right now.
So you said that India, China, they're going to be bigger than the U.S. What do you mean by bigger than the U.S.?
Bigger in terms of GDP, bigger in terms of growth. They're already huge in terms of population. Yes, there has been a slowing down of the population growth in India and China. But look, we outsource. Like it or not, it's the truth. We outsource so many jobs. We're losing so many jobs in the United States to, yes, automation, but also outsourcing, which has not slowed down. You've got workers over there who work longer. They work for lower wages. They don't get the benefits that we do. It's a huge economy. We just can't compete in the way they can, ethical or not. Doesn't matter. It's happening. They are a growing economy. We are a slowing economy. Can we do anything about it? Well, right now we have to look at other, if you're a millennial, if you're a baby boomer, whatever age you're at, you're going to have to start looking at jobs and careers. And we can certainly talk about that today if you want to. Areas where you won't get outsourced, you won't get replaced by automation. Okay. Even if you work, no matter what you do. Have you seen McDonald's where they have the kiosks now?
Yeah.
Okay. Yeah. So even those low-paying jobs in this so-called recovery, and people can't see it, but I'm using the quote fingers right now around recovery. Okay. The so-called recovery in the United States did not really happen, and we could talk more about that. But China and India, you could talk about the temporary noise, the temporary slowdown in China, but they are growing. They are having a better standard of living compared to us, where the middle class is evaporating very quickly, and our jobs are going over there. So they are expanding while we are contracting, unfortunately.
Now, you talked about the Chinese de-dollarizing, Russia is de-dollarizing, and you talked about the Fed, which I want to get into in just a minute. But first, you mentioned something about this recovery that never really happened, and I just wanted to read out these tweets. Now, this one is from September 2018 from Trump. President Trump would need a magic wand to get 4% GDP. This is coming from Obama. I guess I have a magic wand, 4.2%, and we will do much better than this. We have just begun. Fast forward to January 21st, 2019, Trump said, last year was the best year for American manufacturing job growth since 1997, or 21 years. The previous administration said manufacturing will not come back to the U.S. You would need a magic wand. And he said, I guess I found and he made this all caps, magic wand, and it is only getting better. Trump. Now, this magic wand, you talked about this is really not a recovery. Do you believe that he figured out a way to boost the economy by maybe manipulation or something like that? I mean, what is your take on these tweets that as he's talking to Obama?
Yeah, it's optimistic, this magic wand thinking, but there is no magic wand. And this is true regardless of who is in the presidency, because they don't really look, there's a globalist syndicate that runs the world, not just the United States, behind the scenes. It doesn't even matter who the president is. So that's why I don't make a lot of specific political statements, because that we could have a puppet, we could have a face. All right. But that doesn't even really matter. There's something going on much deeper than that. And that's being controlled by a deep state, which is much deeper than anything that we see on the surface, because we can get mired down in these day-to-day politics and the noise, as I call it. But meanwhile, there's a war against the middle class going on by the elite, by the globalist elite and the syndicate that's running things. All right. In case people haven't noticed already, the middle class is evaporating. It's going to be gone by 2022. It's already pretty much gone in this so-called recovery we've been talking about. Yeah, I stand by that. 2022, mark that year. There will be no middle class. You'll either be in the 10% that's wealthy or in the 90% that grind it out every single day throughout your life and most people have no savings or minimal savings, live paycheck to paycheck. America's stagnating in terms of wages. The cost of living is going up. There's no turning the clock back now because there's so many cheap labor countries out there, China, India, we talked about that. So there is no magic wand. The only thing the U.S. can do is create incentives for companies not to outsource, not to automate, America needs to have a financially educated population, which it doesn't have right now. I know that because I'm a former elementary, high school, and college teacher, and they had no financial education, which is why I'm doing what I do now with Portfolio Wealth Global. People go to school and they learn absolutely nothing of any importance. They don't learn about the Constitution. They don't learn about rights, basic rights. People don't even know what the law is or what the rights are. Look, if you want a strong America, forget magic wand thinking. If you want a robust economy, we need to go back to fiscal responsibility. We need to go back to the Constitution. It's more relevant today than it's ever been. All right. So you got to get back to the basics. Forget about the tweets. Forget about the noise. Get back to America as it once was and as it can be again. We got to get back to the Constitution and basic rule of law.
No, I agree with that. We need to get back to that. And I mean, you mentioned the Fed and we mentioned the Chinese, and right now we're seeing craziness, around the globe. We see, the Brexit, we have the Chinese mess, we have FedEx and other companies warning about their dismal earnings, and the debt crisis continually is increasing every single day, and the interest payments, well, they keep on increasing every single day.
Oh, yeah.
Now, what's very odd to me about all of this is that since Trump came into the presidency, we have better GDP numbers, the unemployment is down, and the mainstream media is now reporting, and they have a date and time for this, which is kind of strange. They're telling us that 2020 is going to be a recession, and there's many mainstream corporate media articles about this where they say, yes, 2020, there's going to be a recession. New York Times did it, Washington Post, and the rest. Now, how would they know that we're going to enter a recession in 2020? If we go back to 2008, Bernanke said they're not forecasting recession in the year we had a recession, but the mainstream media knows we're going to have a recession in 2020. I mean, is that even possible?
Well, whenever the mainstream media knows something, you can actually fade that. You can go against it and be more successful than most people. So I actually love it when the mainstream media says something. I can use that and then just do the opposite. I'm going to surprise people by saying that, first of all, we're already in a bear market. All right. There's a recession that's actually going on in the markets and in the economy for the average worker, for mainstream society, not for the global elites, of course, who are orchestrating this. Yes, right now, if you look at the U.S. equities markets, there is a sucker's bounce going on. Not today in particular, but since the beginning of 2019. And if people buy into it, if people buy into the narrative that the economy is strong, if they actually believe those jobs numbers that you talked about, which is not the real unemployment figures, by the way, if they're going to regret it if they try to invest now, if they believe in it. So I expect the weakness in the economy, in the markets, to go on for at least 4 to 6 months, perhaps further. Now, in the second part of the year, going into 2020, I actually, instead of a recession, I expect real solutions from the China trade deal to come to fruition. If you're an investor, you can regain your confidence in the global economy because that's what's going to happen. And I think we'll see this big blow off top at that point. I call it the last hurrah, a euphoric top for stocks in 2020, which then will lead to a sell off. Then it will lead to the collapse. But it's been said, I didn't make this up, but bull markets die with euphoria. Okay, they don't die when everybody thinks it's going to die. It doesn't work like that. That would be too easy. Now, the other scenario that could happen is we could see a steep correction from here back into bear market territory. I don't think this is as likely, but we could have a mini recession or a slowdown going into the election, which would change the election result. And if a new president is elected, then we'd start seeing a new bull market. Okay, so look, there's so much uncertainty right now that the game to play, no matter what you're into, is diversification. Stocks could rally on a trade resolution, or they could slow down if the Fed continues raising rates. It could get a lot worse. With all these crazy contrasting scenarios going on right now, you got to diversify, and you got to bargain hunt. So if there's something that's really cheap, like a standalone company, don't buy the whole index, please. Don't buy the S&P 500 right now. You have to look at a standalone company you can either find in the general markets or in the commodities markets. I'm a big fan of gold. or in the cannabis sector, which I believe is going to be very strong going forward. That's what I'm looking for. We're covering these opportunities in the newsletter, portfoliowealthglobal.com. I'll give you an example right now, something actionable. We covered Walgreens, okay, the biggest pharmacy in the world. We covered it at $63 a share, and it went over $85, but we had a recent correction. It's back to $72, where it is today. We're still up more than 10% since the summer, but I still think this is a great allocation. We're not selling our shares. I think this is the sort of company that has a bright future. It's revolutionizing the entire pharmacy business. So that's what I mean by a concentrated position in one company. Don't just buy the whole index. This is not index buying time. Secondly, I like the opportunities in the cannabis sector right now. I just want to mention that. This is important. I think this is a recession-proof business in the U.S. It's not even legal yet, federally speaking. And the biggest growth is going to come ahead of it. There are a lot of ways to play that. I think their investors have to understand that for the next year, whatever you get into, the name of the game is diversification, not concentration. Don't go too bullish in any asset class. You got to have a spread between a number of safe havens. We have a report on that, portfoliowealthglobal.com/safe havens. We'll give you a list of 5 safe havens we really like. And we cover in the newsletter. But whatever you get into, don't just buy the S&Ps. Don't buy the NASDAQ. Don't buy the Dow. Diversify. Be your own fund manager. Don't believe the narrative. Will a recession come? Of course, eventually. But don't try to time it. This is not the time for that.
So before you mentioned the Fed, I personally do not like the Fed. I speak out against the Fed. And right now, the U.S. is in a huge amount of debt. I mean, every year we can see that the debt continually rises and the tax receipts that are coming in, they barely can cover or can't cover the interest payments on this debt. And if the debt continually rises, we're going to have a problem. Now, very interestingly, Trump has been contradicting the Fed quite a bit. He's been outspoken about the Fed. And Thomas Massie has introduced a bill, H.R. 24, which is audit the Fed, of course. And there's another bill, H.R. 25, which is basically abolish the IRS.
Yeah.
Now, you talked about China and you talked about the Fed and how China and Russia are de-dollarizing. Do you think these other countries, and I do believe that this dollar is not really the people's dollar, it's a central bank dollar, it's a debt note.
Yep.
Do you think they're preparing to move completely away from the central bank? And maybe Trump, his administration, maybe actually audit the Fed and take it over? Because if you look at his past tweets and you look at the past, he is not for the Fed whatsoever. Actually, he's for gold.
Yeah.
So do you think that we are headed to a point where the Fed is going to have to, tell everyone what they've been up to by this audit bill maybe getting through? And finally, we can see transparency in what the central bank has really been doing?
I would love to see transparency. And I agree with Trump on that point. He has called the Fed his greatest enemy. And I think it is our greatest enemy. I would love to end the Fed and the IRS. Don't know if that's going to happen anytime soon, especially the IRS. But if we can weaken the Fed, if we can weaken the IRS, if we can keep them out of our pockets and out of our lives, that would be great. Because I like the way you mentioned that they are debt notes. Yes, both U.S. Treasuries and the dollar, really. The United States government has had the privilege of using debt since 1944 in some capacity. First, they cheated on the gold standard, as I'm sure your listeners know, and they didn't mine or purchase gold in order to keep that ratio at 35-1. And when you're a government, you can do a lot of stuff without getting scrutinized or audited. Of course, the average person will get audited if we don't pay our taxes. Speaking of the IRS, then we're screwed. But the auditors are fine. We get the short end of the stick every single time. So the people in power, they don't get audited. They get to do whatever they want. They're above the law. You got the central bankers, the financial elites, like Tim Geithner saying that he doesn't even file taxes. So you got this division between the common people and the elites, the syndicate, as I like to call them. And so the elites are the ones printing the currency, unfortunately. They do it through the central banks. They do it by stealing money from the Pentagon and destroying the documents like they did in 9/11. This just keeps going, and it's going to continue to go on. I don't see the Fed ending at least this year or next year, probably, because the mainstream media keeps people so oblivious to what's going on. Fortunately, you're here and I'm here to help remedy that. Now, when the U.S. creates currency from 1971 onwards, They've had the privilege of doing this with low inflation ramifications, generally speaking, because they export half of it. So, yeah, the U.S. dollar has seen a 1.5% per year reduction in value on average since we depegged from the gold standard, 1971. And the real problems are going to come when China, Japan, Russia, all those holders of treasuries and the dollar, they're going to dump it. They've been dumping it. They're going to stop buying our debt because they don't trust us anymore. And can you blame them at this point with the debt that we have approaching $22 trillion and growing? So even if they keep buying treasuries at the same rate, it still won't be enough, because now we're looking at trillion-dollar deficits, not $500 or $600 billion like it once was. The U.S. will need to compensate for that by printing more currency. Of course, that's what they know how to do. They're not exporting the currency they're printing. They're just going to keep it abroad, and you'll have greater money velocity, higher prices. This is huge. We have a report, portfoliowealthglobal.com/crash, where you can learn more about that. But look, you got to prepare now. Don't expect the Fed to end anytime soon, because most people are not educated like they should be. That's why I'm going to keep reporting on it. You're going to keep reporting on it, I'm sure. This is a very serious situation. Don't just hold your money in dollars. You want to have some dry powder ready. I'm not saying don't have any cash at all. But if you're all about the fiat right now, if you're just rolling it up in a mattress, realize there are better ways to go. There's precious metals. There are other allocations. And if you're into treasury bills, forget it. Then you're going to get wiped out. So this is a very serious situation. Prepare now.
So you mentioned gold, and I just want to go back to a tweet from Trump. This is September 6, 2013. And he said, "Remember the golden rule of negotiating. He who has the gold makes the rules." Which is very interesting, because if you look at his other tweets going back to 2011, 2012, he likes gold a lot. Now, if the debt continually increases and we enter a recession, and I'm thinking back to 1929 when we went into a recession, depression, they asked for gold and then they revalue gold. Do you think the same thing is going to happen, where if we go into recession and it turns into some type of depression, do you think that, I'm not saying they're going to confiscate gold, but do you think gold will be revalued to build confidence? Because we know that China has been accumulating a lot of gold. We know that Russia has been accumulating a lot of gold, and a lot of countries have been repatriating a lot of gold. So do you think that is a possibility?
And also, just to add to that, and Iran, because of to avoid sanctions, they're de-dollarizing, they're loading up on gold. Turkey, Pakistan, India, China, like you mentioned, Japan, all hoarding gold, accumulating gold. It's funny how China doesn't always announce it at first, but they've been hoarding a lot of gold. And do they know something we don't? Or perhaps we do, but just the mainstream press doesn't report on it. The central bankers and the elites, the syndicate, don't want us to know about it. Look, when there was a recession in 2008, 2009, gold went down and then came right back up much faster than the U.S. equities markets do. So, and certain things need to happen for gold to rise. It'll take more than just perhaps one factor to be in place. There needs to be an environment where there's, first of all, a rising inflation trend, which we haven't seen for a while. We saw rising inflation from 2009 to 2011, and gold went up. We saw it from 2000 to 2008, gold went up. We saw it from 1971 to 1980, and gold went up. So in other times, when the U.S. issues debt denominated in its own currency, but bought 40% of the time by foreign investors, it exports inflation out. And so check this out. In 72 different currencies, you're seeing all-time highs for gold right now. But in the dollar, you're not seeing it. So if you have an international portfolio, like I suggest everybody has, remember we talked about diversification, it's good to have some real estate holdings in other countries and other jurisdictions. And if you own gold in other countries, if you convert that to real estate, you're making a pretty good move right now, because that's at all-time highs. In the U.S., not so much. So it's important to understand, when you denominate gold in dollars, it's not a phenomenal trade right now. But it is up fivefold since the beginning of the century, whereas the S&P hasn't even doubled since 2000. So gold really has outperformed stocks in the past 18 years handily, for buy and hold investors at least. Now, for gold to rally in the U.S., yes, a recession could could be a factor, but there needs to be higher inflation, which it's starting to do now. There needs to be a lowering of interest rates as well. That's key. We haven't seen a concurrence of both of these factors in quite a while, a number of years. Between 2011 and 2015, we saw a lowering of interest rates, but you didn't see higher inflation. That's the thing. Now you're seeing higher inflation, and you're seeing a slight raising, gradual raising of interest rates. Now, when the Fed starts to cut interest rates, either this year or next year, and inflation keeps on going up because there's a lot of economic activity in the U.S. right now, a lot of millennials getting into the workforce, you're going to see both of those factors together, and then gold can rally big time. I know we've heard about gold at 2,000, 5,000. Yes, it can reach these levels. Right now, just in the shorter term, I have a $1,700 price target. I believe this is definitely possible.
So when you say a $1,700 price target, I mean, when are you talking about? You're talking about this year, next year?
Yeah, no, this year for sure. It's breaking out of a range. It had a fantastic fourth quarter of 2018, despite what a lot of people got out at the bottom, at the short-term bottom, unfortunately. And it's too bad for them, because if you really believe in gold, you have to understand its value as not only a crisis hedge, but as a real form of money, one of the few that really exists and has had staying power, unlike fiat. Because all fiat eventually goes to zero. I know I didn't make that up, but that is its true value, its intrinsic value. Also, you can play it through silver, by the way. You don't have to just get into gold. I'm a huge fan of silver. For silver, it's important. You have to realize when stocks do poorly, which I expect, silver really shines, no pun intended, when that happens. So in a bear market, silver has more of a bid because people are looking to diversify into commodities and out of stocks, which I don't blame them. So if there's a bear market in 2019, this will play right into gold and especially silver. You'll see silver go much, much higher. With regards to precious metals generally, I think there's an accumulation period going right now for people who want to own the underlying commodity. Not as much for gold shares. Talking about, mining stocks, exploration, development stocks, unless the markets do really poorly. Now, if they do, we're going to see, we're going to see another 2016 situation where gold and silver stocks did extremely well. But again, these are very risky types of investments. You got to be super careful with that. Don't put more than 1 or 2% at most of your portfolio into each trade in the mining sector, and use a stop loss, please, whatever you do. If you own the physical as a form of insurance, not as a trade, just own enough of it that you can feel comfortable so you can convert it for lifestyle expenses no matter what happens. Well, look, gold, silver, stocks, bonds, these are all things you can buy when you have money. And there's a problem. Most people don't even have enough money right now to buy these things. It's a serious problem. In 10 years of economic expansion, the rich have gotten richer. The middle class and the poor have gotten screwed by central bank or monetary policy, low interest rates, zero interest rates. The government has not invested in the economy. It's unsustainable. There's a total neglect of the working class in America. The corporations are outsourcing. We talked about that, automating. And meanwhile, these corporations are super profitable. Their shareholders are doing just fine. For the average American, 15 million Americans working for minimum wage right now. 75 million working for $30,000 a year or less, and that's pre-taxes. They don't own stocks. They don't have bonds. They don't know the first thing about gold and silver. What we need is a renaissance of the working class, an opportunity, better opportunities for the average working American, the average Joe and the average Jane out there, like you and me. We need businesses coming to the surface and stepping up. We have a report about that if people want to learn more. portfoliowealthglobal.com/money/money. We have all the reports on one page where people can learn about that, about the renaissance that's coming in the working class, about how you can invest even if you don't have a lot of funds right now. It is possible. You need the financial education. Don't count on the CNBCs and the MSNBCs of the world to educate you on these things, because they're not going to tell you about it.
I agree. And I just want to go back to gold, where it's going to hit 1,700. Won't this expose the Fed and the dollar? I mean, we saw gold move up, what was it, like 2010, 2011 to like 1900, very close to that, or it hit 1900.
Yeah.
If gold moves up, and it moves up because what is it, around 12 something, very close to 13?
Yeah.
If it moves up another $400, won't that expose the dollar, the Fed? Because gold is the enemy of the Fed.
Yeah. And gold is the anti-dollar. It's the anti-Fed. It's the ultimate power in the hands of the people. And so I'm looking forward to the expose of the Fed and of the worthlessness of the dollar and of the money printing and of the worthlessness of their debt notes, their treasuries. They're all debt notes. Dollars too. It's trust in the debt. When you hold a lot of dollars and when you hold treasuries, you're believing the promise, the consistently broken promise of the Fed, and that's true of any country. When you hold their fiat and when you hold their bonds, you're believing that they're going to repay. Well, America does not have a sterling reputation when it comes to repayment of debts. So I don't recommend holding either one of those, as I've mentioned. And yes, it will expose the Fed. A $400 price increase in gold will show everybody what really has value. Gold and silver have been around as a form of money for over 6,000 years. That's not going to stop anytime soon. Whereas fiat currency, it is temporary. 1971 was the worst year ever and the biggest mistake ever. It solved temporary problems back then because the government was worried about what if everybody called in. There were more and more dollars floating around in the world back in 1971. It was increasing as a form of currency globally. And yes, you could redeem it for gold back then. And the U.S. government was worried, what if all these nations called in their dollars for gold? And so they depegged it. Well, that may seemingly have solved a temporary problem, but it created a much bigger one where the dollars are worthless or heading toward that. Gold, on the other hand, is doing fine. It is breaking out of a range. For patient investors, for those who didn't sell at the short-term bottom in 2018, when they didn't run out of patience because it was in a tight range, it is breaking out of the range. It's come on, how much longer before it breaks through 1,300? And that is such a key psychological level. Once it breaks through that in a decisive way, then those other barriers will be nothing because, yes, it did go up to 1895 and change, and it could certainly reach that again. Again, these are all psychological barriers to be broken. I believe it'll happen this year or early next year. PortfolioWealthGlobal.com/gold playbook if you want to learn more. And again, if you want some leverage on that, get silver. If you want even more leverage with more risk, granted, try the mining shares.
David, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
Absolutely. If you go to PortfolioWealthGlobal.com, get the newsletter. I can only tell you so much in this format. So if you get the reports, if you go to PortfolioWealthGlobal.com/money, we have all the reports on one page. You can download one, download them all. And if people want to contact me, I'm at davidmoadel@gmail.com, and it's Moadel for my last name because people don't always get it right. And if you want me to point out some more resources, I'll be glad to do that.
Dave, just send me the links and I'll put them at the bottom of the video so it would make it easier for people just to click on them if they want to see these reports and things like that.
You got it.
All right. Thank you very much. Thank you for being on the Spotlight. I really appreciate it.